Rahim. Assalamu alaikum. Good afternoon, everyone. Everybody is audible. Please, if anybody has issue with the voice, he can raise alarm. Otherwise, I'll continue. Thank you again for joining this investor relation session. We are presenting the financial performance of the Asafa Food for the year 2024. This is Rafiq Chaudhary, the acting CEO and the CFO of the Asafa Food. I have my colleague with me, Yasser Al-Salmani, Deputy CFO, and Mr. Bilal. And Amira she is the moderator of this meeting. We would like to happily inform that we completed the 20-year in 2024, the successful operation of the Asafa Food, which we have already, advertised also for the operation, which was celebrated in the presence of the dignitaries in Salalah. And we have also installed installed and successfully started the operation for the solar project also in the 2024. And we would again, as we informed that the Asafa has continuously expanding its facility, expanding its operational capacity. So in 2024, we have increased our capacity by another 15%. By expanding our hatchery production, we increased the production by 15%, which was started from the July 2024. This expansion and plus some carryover stocks helped us to increase a tremendous increase in the sales. Our sale has increased almost 19% as compared to the 2024. I hope everyone is looking the presentation now. So now I would request my colleague Yasser to explain further on the progress of the 2024.
Thank you, Mr. Rafiq. Assalamu alaikum, everybody. Good afternoon. Ramadan Kareem to you. As Mr. Rafiq mentioned in the brief introduction, that there is a remarkable increase in the sales this year as compared to the last year, with almost a 19% increase. And the reason, as briefly mentioned also by Mr. Rafiq, that due to the carry forward stock, which was liquidated mainly in the Q1 of 2024. Also, there is a improvement in the hatchery production, which resulted in an increase in the production. So that was result in 10 million increase in the revenue as compared to the last year, which is also impacted positively in the gross profit, which is resulting to 21% increase from last year. With regards to the expenses, as you can see, it's a normal increase in line with the production increase. So, alhamdulillah, the gross profit also, there is a profit before interest and tax. Also, there is a remarkable increase, but I will go only to highlight the bottom line, where you can see the results are significantly, remarkably increased from last year by 128% from last year, with almost 3.3 million increase from as we compare it from the last year in the profit and loss and total comprehensive income. That is also, I just want to mention the positive impact that we have gained this year from our associate. As you can see in the financials, there was a share of loss from the associate recorded in the last year, which is almost 428,000. But there is a turnaround this year, alhamdulillah. We recorded our share of profit from the associate, and we recorded 718,000. So that also added a positive impact to our performance this year in the parent level as well as the consolidated level. So this is a brief of our financials. The details as well was shared in the MSX website. So I assume that everybody also had a chance to look at it. And hence, if you have any questions regarding the financials, we will be able to answer.
So we request everyone, if any question, yes.
Thank you. Thank you for the call. This is Abbas Muslimi from Vision Capital. Just a couple of, we've been obviously chatting with you, Mr. Chaudhary, and the team for a few years now. Just to, understand from the top-down basis, what sort of geographical split are you looking at going forward? What sort of capacity are you at right now? I know you mentioned that there's an expansion coming from 48 to 60 million. When will the expansion go live? Where do you see selling the extra capacity? Is it the same geographical mix right now, or you're sort of trying to expand into other markets? Trying to understand the actual segment data from you and how you see the outlook for the company from just the capacity and revenue point of view, and then we'll try and drill down to the profitability. That's my first question, sir.
Thank you very much. Very valid question. I mean, our major market, our main market is Oman market. This is we are exporting to the other GCC countries also. We are exporting to the Qatar, UAE, Bahrain, Kuwait, and Yemen also. But our main market is the Oman market, which is, in fact, which was 60% 2 years before. Now the Oman market has gone to the 75% of the total production is being consumed in the local market. And going forward also, we understand that our market, our demand in Oman is further increasing. And this is honestly, if you look at the demand from the Oman market, this has forced us to go for the further expansion very soon. I mean, this year, we have already, the expansion has been approved for our next phase. We are going for another expansion of increasing to the 60 million the birds, the capacity production that we will be completing, hopefully, the expansion in the 2025. So that expansion, mainly, we are looking the further requirement from the Oman market. So this is the answer, which is, we are talking about the geographical, the market positioning. But at the same time, our demand from the other GCC market is also increasing. We have now with us the approval from the Saudi authority. They have approved our project as a GCC. I mean, the project they have approved. We can sell our project in the Saudi market, but we don't have that much capacity now because the capacity is already sorted out. I mean, we are already fulfilling the demand from hardly fulfilling the demand from our current market. So that is the market positioning. And regarding the expansion, yes, we are building another 45 houses in the 2024, which will increase our production another 20%, and hopefully complete by the end of the next year or the Q1 of the 2026. Did I miss any of your question?
Thank you. I appreciate the answer. Can you tell me the size of the capex you're looking to incur, and will this entirely be financed through debt, or is there some internal accrual that you're going to use for this 12 million ton expansion?
This expansion cost is around 14 million,
Yes.
Yeah, 14 million Riyal money, the total cost, and which we are by our internal cash generation plus the debt, both combination. that we are financing it.
And you said 14 million, right?
14 million. Yes, that's right.
Right, and it's going to be financed through a combination of debt and equity.
Yeah, debt and the internal cash generation.
Right. And so now if I have to drill down and just come down to your margins, the company has used to enjoy gross profit margins of close to 34-35% in 19 and 20. Now that has sort of come down to the 24-25 mark. Last year you were close to 28%. And given that you sell 70% of your produce in Oman, your production in Oman, and there is a very strict PACP when it comes to price controls, how do you see margins behaving? And what will make margins go up from here? Is there any pricing power? Is there any pricing increases that you can plan? Anything on the cost side? Just trying to understand, sir.
Our prices are from the 2000 probably 8 or 9, the same prices. We have not got any price increase, and honestly, we have not asked for any price increase also. So we are mainly working on our production efficiency, on our, the optimization of the volume optimization, cost optimization, resource optimization. That is the focus which we are continuously. During this time, the feed material prices went high up to the double prices. Just giving one example of the corn, which usually was earlier before the 2020 was $200, $230, $240. It went higher up to the $400 also. So this was the level of the price increase. But even during that time also, we did not approach for the price increase. We were mainly working on our the optimization of our resources. As I think you have mentioned about the gross profit of the 2019, I think the 2019, if we're talking 2019-18, we should be better off in the gross profit by going into the higher volume, by the volume optimization. Yes, there was a better the gross profit if I speak about the 2012 to 2016. But that was the time when we were having the feed subsidy available, which is no more available to us. So that was the main difference from that time. Yes, there are the price impact, the feed material prices that impact directly the gross profit. That happened according to the market requirement. So we are expecting, if we look at the future, we are expecting the stability in the feed prices. We are honestly not focusing on not any planning for any price increase. We are still working on the increase in our volume and to go to the bigger volume to achieve the better profitability, not going into the price increase.
Okay, understood. And how are feed prices behaving in the last 3 months? And is there a strategy of the company where, because your end prices are fixed, you're pretty much working at close to 100% capacity utilization, and that's why you've gone ahead and thought about this expansion. So in that scenario, how do you react to feed prices when they come down from averages? Do you sort of book in more inventory? Is there a way to sort of store it for you? I'm just trying to understand how you take advantage of these dynamic prices when they move in your favor.
Market is honestly quite various factors. They are affecting the feed prices. The news and this thing that are affecting the prices. What we are doing, we are keeping ourselves fully aware of the market changes. We are aware of we are fully considering the seasonability of the commodities also, and we are trying to buy the material when the prices are going lower. And yes, we have the good storage facility at the site also, at the Salala also, and we are taking that advantage for that storage facility. We are always keeping minimum 3 months stock with us. So that is our 3 month stock, or the coverage of stock 3 to 4 months is always there with us.
Okay. 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 And so from this year's perspective, when you look at 2025, the new capacity expansion is only going to go live, like you said, probably towards the end of the year. And in 2024, also there was a capacity expansion that came on stream. Can you remind me, when did the capacity expansion of 24 came on stream? Which quarter was it?
Q2, July.
In the July quarter.
2024? Yes,
right.
That's right.
And just to
Yeah.
confirm, have you already ramped up to 100% capacity utilization?
Sorry, I missed. You're happy with the capacity utilization?
Are you at 100% capacity utilization right now?
We are at 100% capacity utilization. We are honestly at 100% capacity utilization from 2006 onward. I don't remember that anywhere we have reduced our capacity utilization.
Okay. So barring first quarter of 24, when we were on a call and there was a sort of inventory buildup that you went ahead and sold, I think just before or it was during the Ramadan quarter. Now, what is the reason of seasonality that I see? When I see your third quarter of last year and I see a drop in from the top line, from revenue, from 16 to 13.8 billion. So what's going on in these quarters in the middle? Is there a natural seasonality to your business, or am I missing something?
No, I think there was the decision where we hold some stocks for the export market in the quarter 4 of the 2023. So that stock, and we were considering the Ramadan, the sales also. So that stock there was a stock build-up. So that stock was sold in the January and the February 2024 and the March also. And I think some stock was in the April also. So which was the main reason that there was a huge sale, and that was not, as parallel to the production capacity. So later on, though we were at 100% capacity, but we were not, because the stock was not there. Now, currently, if we look at our current stock, it's, I think, for the last probably 8-9 months, we are less than 10 days stock with us. So we don't have that luxury available where we can achieve more sale by selling the stock. That's why we are going according to the production now. And I think in the 2025, our sale will be smooth in all the quarters because we don't expect any inventory buildup. Whatever the production, it will be sold. So there will be pretty uniform sale in all the quarters.
Excellent. And what about the margins in 25? How do you see them behaving at either the EBITDA level or at the gross level?
We are expecting to give the performance. I don't know. I can speak much on this one. How much I can speak, but our target is to at least go to the performance level, not below the 2024. That is our target.
Okay, excellent. Yeah, that makes sense, right? Because you had a capacity going live in the second quarter. So one, you have the benefit of the whole year, right? Of this new capacity being available to you.
Yeah, that's right. That's
and
why
secondly, if you can, sure. And I think what I was trying to allude to is your major cost item, right? More or less, let's look at only the non-cash costs, right? Cash costs, sorry. Let's not look at the non-cash depreciation and all those things. So from that perspective, you are comfortable that your feed prices, you mentioned that there's no plan to increase prices in the market. You've not gone to PACP. So things look comfortable for you at these levels of feed prices when it comes to your margins. That's my question, sir.
Yeah, honestly, we are already, if we look at our current, because the major is the two commodity, so which we are already covered up to the first 6 months. And we don't foresee anything very big change in the remaining 6 months also. So I think it will be pretty steady with the last year, the cost the costing of the project at the 2025.
Excellent. Thank you. That's all from my side. Thank you for your answers. All the best to you.
Thank you. Thank you. Thank you very much. If anybody has a question, please.
Yes, Shahul,
Hi.
please.
Yes. Hi, sir. Thank you for the presentation. I just had a couple of questions on the industry. So you mentioned that 70% of your sales are locally in here in Oman, and 30% is what you export. Could you give us a brief idea of the overall industry? What's As-Safa's market share, and what are some of the other players? Do you guys have any competition from import? And if so, how does that compete with you, the local player?
I think honestly, roughly, still Oman is importing 40% of its the total requirement, roughly, if I'm talking. And As-Safa is certainly a major volume producer in Oman. I mean, if I combine all the other projects, the poultry broiler project, combining their production, the As-Safa, they might be still less than the As-Safa production capacity. As regard your question of the market share of the As-Safa, so that I think still not a yeah.
The retail.
Yeah. So as my colleague is, so 25 to 30%, I think we have the market share
In the retail.
Yeah. Okay.
Right. Perfect. Thank you. That gives us a good idea. And with regards to the import, so as you mentioned that still 40% of the poultry requirement is imported now. When we talk about the imports, I'm assuming that you or the local player would have some comparative advantage, against the importers in pricing or something.
Okay. So the first I said that the import is 40%. So this is one of the drive, one of the reason that we are, going for another expansion. And the other thing is because the As-Safa is a premium product, premium brand in Oman. We are the brand leader. We are the market leader also. We are very happy to say that we are the market leader in Oman. Now going to the comparison of the costing, the production, the cost. There we are, if you look at if someone look at the efficiencies of the production efficiency, how much feed we are consuming to produce the 1 kg chicken, or how much the other cost, we are comparing honestly not the regional project, even the international or the world project, we are very efficient project. We are very, careful about our production cost, efficiency, about the production mortality and everything. So there we are very efficient, and those efficiencies, production efficiency, is helping us to compete all the big the producer internationally who are exporting to Oman. So we are competing with them the price wise also based on our production efficiency and the procurement plans also. Yes, we do have the advantage because we are producing locally. We are, so that transportation cost and other, so those advantage also we are enjoying, but at the same time we have to incur the additional cost to bring the material also here, because all the material almost we are importing, not available in the country. But that we are compensating by our production efficiency and by saving in bringing the material, the finished product, because we are producing locally.
Great. That makes sense. So you can easily, secure or increase your market share as you increase your capacities, right? That makes sense, sir. So thank you. Now, my another question is related to your product mix. So between frozen and fresh, what is your product mix, and which of these two are higher, margin generating products?
Okay, so between the you mean the product mix is mainly our, you are speaking about the poultry meat, which is chilled product and the frozen product. And with regards to the margin, we see that both of the products are fairly the same margin. However, we have to cater both the customer's requirement. With regards to the products mix, so it's about 15% will be the chilled and the rest will be the frozen.
So as Mr. Yasser has explained, we are not, the pricing is not based on any that we will get a better profit on the fresh or the frozen. Our margin is almost the same on both the product, but we are producing according to the market need. So the market fresh is increasing now. So I think it has increased further because the demand, if we look at this is the average which Yasser has told, but currently if you look at the last few weeks, the fresh is increasing now. It is going even 20% also, maybe 20% plus also.
Normally also there is a seasonality. For example, in Ramadan, people mainly will buy more fresh chicken. So that, as Mr. Rafiq just mentioned, it might touch even 20-21% in some of the seasons like Ramadan.
Great, sir. Thank you very much. Now, my another question is related. Okay, I'm sorry for the disturbance. So, my other question is related to the cost of raw material consumed. Now, we can see that roughly 50% of your sales goes into your raw materials. My question is regarding the mix between your biological inputs and your feed and nutrition grain of this total number.
Understand.
Yeah, can you repeat the question again?
So out of your total cost of raw materials, what percentage is your biological input, so the chicken itself or the chicks, and what percentage is the feed that is required to grow them and then process them?
You see, the biological is basically the biological inventory is the chick which we have. We are buying the parent chick from the importing also, only the parent chick. The broiler chick we are producing at in-house. We have our own hatchery. We have the parent farm, which is breeder farm, which we are buying, and their product is going to the hatchery, and we are producing the broiler chick. And those broiler chicks are then further growing into the broiler bird. So this is all biological inventory. And to produce the biological inventory, we feed them. So basically, the feed material is, to feed the chick, to make them, to grow them, to reach the stage when they will be slaughtered and meat is produced. So our major cost is feed. And consuming the feed, we are producing the biological inventory. I hope if it is explained properly.
Yes, sir. Yes. Would you be able to give us a ballpark number of roughly 70 to 80% would be the feed and the rest would be the biological inputs, if I'm not wrong?
No, the feed is the cost. You see, the biological is the inventory. So there is
okay.
I'm explaining that biological is inventory. It's not the cost. The cost is the feed.
Great.
The biological will be asset. We will value to make our balance sheet that how much the biological inventory we have. But basically, our cost is the feed. And I think because looking at the normally if we look at the broiler farm, because they have the feed cost up to the 78%, but our is maybe the feed cost is around 40%, I think, because 40%, yeah, 40% is the feed material cost. Then we have the other cost, the packaging material, the medicine, overhead, the maintenance. So those are the other costs. even our distribution cost. So that is also because we have our own supply chain all over the Oman.
Perfect, sir. Thank you very much for the explanation. That resolves my questions. Thank you.
Thank you. Thank you. If anybody else has a question, please raise the flag. So I think no one is there. All the question, the two gentlemen, I think they have asked all the question. So thank you everyone for joining the session, and hope for to meet with a good result next year also.
Thank you.
Thank you.
Thank you, sir.
Thank you.